The stock market rally have some investors looking to bonds. I want to bring in my guest contributor for the hour, Aadil Zaman, who is the partner at Wall Street Alliance Group. Great to have you here with us in studio.
Good to be with you.
So let's just set the scene here for what is transpiring here today and the demand for the auctions that have already happened over the course of this week. You had what essentially went well for a solid 3-year and 10-year auction earlier this week. What does that set up perhaps for the longer duration 30-year that we're awaiting later on this afternoon?
I think investors will gravitate towards bonds because there's a lot of uncertainty still. Our outlook has always been that first half of the year, the market's going to pull back. Second half of the year, the market goes up. But there's going to be uncertainty. You're hearing about this tariff issues, uncertainty regarding the deficit. All of that is creating volatility in the market, and the safe haven play, investors gravitating towards bonds, gravitating towards gold, we are going to start to see a lot of that.
And so with that in mind, the appetite that we're seeing for bonds versus equities, how are you seeing that kind of transpire and play out in the investor's mindset right now versus a normalized period when we didn't have Fed policy being more imminent and us waiting for them to start cutting, plus the additive of tariff policy that has really rocked the markets this year?
Yeah, I think it's like an insurance in the portfolio. And we've been talking to clients about making sure that the breadth in their portfolios are wide. You know, one of the issues we constantly see is people become concentrated in certain sectors. So having your bond exposure, keeping the portfolio broad, having some gold exposure in the portfolio actually protects you on those downsides. So we are advocating for clients to increase that exposure so that they can, that gives them the option to pivot and be more aggressive when the opportunity is there.
Earlier this week, I was taking a look at a note from UBS that made its way into my inbox saying that they believe the Fed and or the Trump administration would likely make adjustments in the event of much higher yields. In their view, this means high-grade and investment-grade bonds represent good value at current levels for investors seeking portfolio income here. Just want to get your reaction to that way of thinking that some investors may be deploying right now.
Yeah, I think that, I think right now where the situation is as far as the market is concerned, there is certainly an appetite for bonds because, again, there's so much volatility related to this. And I think when it comes to the budget deficit issues, that's driving a big concern because investors feel that that could potentially have macro consequences, could potentially weaken the dollar as well. So because of that, we are seeing some appetite for these safe havens.
If we may, let's flip over to some of the sectors that you like right now in the equities landscape. Where are you looking to at this juncture?
Yeah, so what we are advocating is that keep the portfolio broad. And being broad means that having some exposure to utilities, for example, because artificial intelligence is going to grow, demand for electricity is going to go up. Because of Trump's deregulation, financials should do well. Consumer staples in a volatile environment are considered to be safe havens. So we want to keep broad as far as the equity exposure is concerned. And then what we also want to do is that we want to have gold in the portfolio as a hedge. Gold has been a tremendous hedge in our clients' portfolios this year. It's up more than 25%. And what we are seeing is that as the dollar is becoming weaker, international markets are appreciating from a relative point of view as well. And those have tremendously underperformed the US market since the financial crisis. So these are some of the areas that we are adding exposure to for our clients.
Okay, stick around with us for the hour, Aadil. If you get hungry, we'll Uber eat some snacks or something. As we talk about that leadership, Aadil, what are you anticipating from the Mag 7, especially as we're looking for this diversification within portfolios right now?
Yeah, so we do think that these companies will continue to do well because what happens is that there's a lot of expenditure that is going into artificial intelligence. There's a lot of government policy that is supporting artificial. There's deregulation also happening. And that makes us believe that because of the productivity that these companies are bringing about, because of AI-related productivity, that's going to cause GDP to increase as well. So we do think that the Mag 7 will continue to do well, but one of the problems we see, we deal with a lot of retail investors. One of the problems we see is that people are like overly concentrated in the Mag 7. They'll have 60 to 70% of their portfolio in tech-related investments. That's where we want to put the personal finance hat on, and we want to say that this can be treacherous make sure you're broad, because to your point, there are a lot of other sectors that are doing really well. AI doesn't mean that only Mag 7 will do well. There are other sectors that could do well also.
Has that rebalancing started to happen among clients yet? Because I feel like April was maybe a wake up, or February to April was a little bit of a wake up call, right? A lot of those stocks got hammered pretty significantly, but then you had the strong come up really over the last month and a half now. Are clients starting to really wonder, like, okay, should I rebalance here? Did I just hold NVIDIA, it did really well, and now it's too big in the portfolio?
Well, this is where the behavioral finance comes in as well, because people don't want to sell NVIDIA, like they love it, right? So, and where others were being aggressive end of last year, we were being defensive. We were saying, all right, take a pause, take a step back, right size your exposure to these companies, increase the breadth of your portfolio. So we have been doing it, but I do feel that the ordinary retail investor that is having a do-it-yourself approach is overexposed there. If you look at the S&P 500 by itself, that's more than 40% in tech right now. And if you add a few other technology companies in the portfolio, now you're 50, 60% in tech, right? That's the ordinary retail investor that has a do-it-yourself approach.
And so with that in mind, there was a competitive issue that all of these companies, to your point earlier in the year, had to move through, which was, okay, what's the risk of a DeepSeek? Yeah. And investors having to wrap their minds around that. At the same time, knowing that they were going to be investing these Mag 7 businesses, investing heavily, and the capital expenditures were what they were going to be measured on and how quickly they could deliver that return on investment here. I mean, how far out should investors be expecting for some of those massive multi and $100+ billion sums to actually be accretive into the business performance and bottom line?
Yeah, so we do think that it's going to be sooner rather than later. We do think that what a lot of people are underestimating right now is that, just when the internet came about, right? When the internet came about, there was huge productivity increases, right? In the same way with AI, there's going to be huge productivity increases, which is going to translate into GDP growth, in our opinion. So that is why our thesis has always been that this budget deficit issue is a problem, but there's a strong possibility that we can grow out of it as well.
And you had sort of mentioned, I think earlier, utilities as one way to maybe play that AI expansion, right? But I'm curious, other sectors, right? Do you see opportunity? And some folks we have that we talk to, Brad, talk about maybe retail, right? If they're able to use AI, and then they obviously could boost margins through less workforce, et cetera. I mean, how do you think about the spreading of AI and sort of where else that trade goes?
Absolutely, that's a fair point. So retailers, industrials. One of the companies that we like is Eaton, for example. Yeah. And they make the equipment that is used to transmit the electricity. So, and utilities, no one was talking about this. This was one of the most boring sectors ever. It's one of the best performing sectors now, right? So there are ways to play this AI boom by having exposure to other areas, because a lot of businesses are going to benefit. Even in our business, in the wealth management business, we are seeing AI-related benefits, right? So we do think that that's going to help other industries, not just tech.
Appreciate that, Aadil. And Josh. Josh, thanks for hopping on the set. It's now time for some of today's trending tickers. We are watching Adobe, Uber, and Dick's Sporting Goods, and CoreWeave. First up, Adobe set to report second quarter results after the close. Second quarter revenue guidance came in slightly below Wall Street expectations when the company last reported here. You're taking a look at shares of ADBE. They are flat here during today's trading session. There have been a lot of things, Aadil, that we've been tracking within Adobe, and especially with regard to how quickly they're able to implement some of those AI features within their existing platforms for creatives out there that are buying into a lot of the subscriptions and the plans that Adobe has been able to put into market for years to come, and how much of a delta there is between those user experiences as well at the end of the day.
Yeah, I think this space, there's a lot of competition here, and I think Adobe, the stock, has struggled quite a bit. So we would be cautious with this name. And again, this goes back to our theme of trying to be broad and sticking with having a breadth in the portfolio to protect you on the downside.
As I'm taking a look at some of the areas, specifically within the segments that investors are going to be looking across when this company does report earnings, it's expected that they'll report digital media segment revenue of about $17.3 billion, far and away the major leader on a segment basis here. But you've also got the digital experience, which includes the cloud subscriptions and other digital experiences. But the cloud subscriptions, essentially coming in at $5.1 billion is what they're looking for here of that overall $5.8 billion pie for the digital experience side. So ultimately, we'll see exactly where those numbers come in at, but it still is a larger question for some of their bigger corporate clients. What's the deal scrutiny and what that pipeline looks like for some of the seats that sit underneath of these services as well here, it seems.
Sure, yeah, and with businesses scaling back a little bit because of the uncertainty, I think that could affect the company as well. So those are all things to watch in the earnings report.
Next up here, we're also tracking Uber and Dick's Sporting Goods announcing a partnership bringing the retailers' products to the Uber Eats platform. Consumers can now order equipment, apparel, and more for on-demand delivery through the app. You're taking a look at shares of both of these companies here, and they are moving fractionally lower as we are seeing with the broader markets. I saw this morning, and it immediately said to me, you know what, this is not bad. Imagine you're at the beach one day, you're with your friends, and hey, yo, we forgot the ball. Like, we can't do the activity that we were hoping to, and so now we can perhaps through Uber Eats both, get a pizza delivered to the beach as well as whatever softball or baseball or, I don't know. People are not playing pickleball at the beach these days. Not yet, but they'll figure out a way. A sand wedge perhaps. If you're going to be practicing on the beach, just don't hit anybody with that golf ball. Get the foam balls. But we look at all the ways that Uber Eats has tried to really entrench itself. How is this fitting into the overall kind of super appification, if you will, of Uber's strategy from your perspective?
I think they've done a phenomenal job, right? Where they've got a very diversified business mix. It went from this hyper growth company into a very diversified company. That's a core company right now to look at. They're firing on all cylinders. They've got this Uber delivery. I think this partnership is phenomenal. I agree with you. They've got the subscription business with the advertising. They've got the autonomous vehicle. They've got the ride sharing. I think Uber Eats, I use it all the time. So I think this is very positive.
Big time for Dick's Sporting Goods too, especially coming off of the announcement of the acquisition that's going to be moving forward with Foot Locker here. So maybe, I don't know, some of those shoe boxes that would usually be coming straight from Dick's Sporting Goods might also be coming from Foot Locker via an Uber Eats delivery. We will see how that plays out indeed. Finally here, we want to talk about one more name that we're tracking. This one is CoreWeave, one of these recent IPOs, of course, set to provide computing capacity to Google's cloud unit. This is according to a report from Reuters. Google will then sell that computing capacity to OpenAI as part of its newly signed partnership, enhancing OpenAI's computing power here. This, for CoreWeave, has been one that has been absolutely off into the races for investors that are trying to get some type of exposure into the IPO markets and the IPO market, those companies that are making their public debuts and clearly have a solid business model at least. How is this kind of setting the tone for what we're also going to hear a little bit more about today with Chime's IPO and the broader landscape for public debuts right now?
Yeah, I think the appetite is going to eventually. What's happening right now is that there's still a lot of uncertainty, but slowly we are seeing some of this appetite come back.
Yeah.
And we saw the inflation data, and if the inflation data continues to show that inflation is falling and we start getting rate cuts after the summer, I think we should start to see the IPO market pick up more. And that's part of the reasons why we think that some of the financials will do well, because not only because of deregulation, but also because of investment banking activity as well and IPO activity picking up.
Absolutely. You can scan the QR code below to track the best and worst performing stocks of the session with Yahoo Finance's trending tickers page. We've got all your markets action straight ahead. Stay tuned. You're watching Catalysts.
Hi, Garrett. So, Garrett, the stock has fallen significantly recently. How much of all these concerns that you spoke about, how much of that is already factored into the stock price? And isn't it fair to say that Tesla, as far as the robotaxi is concerned, has an edge over other competitors because of the scale that it's going to reach? So Waymo's been around for a while, but the scale that Tesla is going to reach is going to be far greater than some of these other competitors.
Yeah, so on the second point, we agree with the scale. We think Tesla has major advantages. We are bullish longer term on the story here. In terms of cost and production capacity, currently they have annual vehicle production capacity of about 2.3 million units. And we think the autonomous technology that they're using, much different than what Waymo's using. Waymo using a combination of LiDAR, radar, and cameras, whereas Tesla's pretty much exclusively using cameras as well as AI at this point. So I think Tesla has major advantages in terms of cost and ability to scale longer term. Theoretically, being able to convert much of their fleet that's already on the roads to unsupervised robotaxi with a simple software update. So I think Waymo's technology is much more expensive. So, and then on the first point, I think the sell-off in the stock really in the last week or two related to Elon Musk's feud with President Trump. So, but they seem to be reconciling. I think there's been a fair amount of damage done to the brand, though, over the last several months, and I think that's directly. You can see that with market share losses. So, but they seem to be reconciling, and I think a move to the middle for him is going to be a good thing for Tesla.
Garrett, good to have you here with us. Thanks for breaking down some of the drivers behind Tesla stock, or those, I guess, that won't be behind Tesla's cars at the same time in the near future. Thank you so much. Still with us, we've got Aadil Zaman, who is the partner at Wall Street Alliance Group. As we were running through what is on the docket here, especially with regard to how investors are thinking about this tax bill and the implication, what should be top of mind? What should be their checklist as well?
I think there are a few things that are getting overlooked in this bill. So when Trump cut the corporate tax rates from 35% to 21%, the corporate tax revenue increased, not decreased. It went up from 200 billion to 500 billion.
Why do you think that is?
Because we were uncompetitive. And Laffer curve, we've heard about this. When tax rates are too high, if you reduce them, tax revenues actually go up. So a lot of the provisions in this bill, we think, will potentially increase tax revenues, plus the tariffs could increase tax revenues. One of the provisions that's in this bill is the bonus depreciation of equipment. And that in itself could potentially increase the GDP by 0.9%. So plus with the tariff revenues coming in as well, and with the AI-driven productivity growth, which this administration is really encouraging, we do feel that the budget deficit issue could get resolved.
Interesting. And so for investors here, there's a lot within the hearings that are also moving forward. We're going to continue to monitor and bring to their attention here. You've been kind enough to grace us with your presence and your time here this morning. Aadil Zaman, who is the Wall Street Alliance Group partner, thank you for your insights throughout the hour.
Thank you. Appreciate it. Great being with you.
Great to see you.